Hey friends, welcome to today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. We've got a lot to cover, so let's dive right in. First up, let's talk about Paragon Reit. For those who might not know, Paragon Reit is a real estate investment trust that owns prime retail and medical suite properties in Singapore. Its ticker symbol is CCQ1U on the Singapore Exchange. Now here's where things get interesting. The manager of Paragon Reit has just announced they'll be holding an extraordinary general meeting on April 22nd. What's it all about? Well, they're going to vote on a proposed privatization. This privatization would happen through what's called a trust scheme of arrangement. In simple terms, if the unit holders approve this plan, they'll receive $0.98 per unit from the offerer, times properties. Now let's put this in context. On Wednesday, Paragon Reit's units closed at $0.97. Which was actually a 0.5% increase from the previous day. So what does this mean for investors? Well, if you're holding Paragon Reit units, you might want to keep a close eye on this development. The proposed offer price is slightly above the current trading price, which could be seen as a positive for unit holders. However, as always, it's important to consider the long-term prospects and your personal investment goals before making any decisions. Moving on to our next company, we've got some news from MM2 Asia. Now, MM2 Asia is an entertainment company that's been in the spotlight recently, and not for the best reasons. They're the ones behind Cathay Cineplexes, a well-known cinema chain in Singapore. Unfortunately, it looks like Cathay is facing some serious challenges. Here's the scoop. Cathay Cineplexes is going to stop operations at its Gem outlet in Jurong East starting today. Why? Well, it turns out they've fallen behind on their rent. The landlord, Lend-Lease Global Commercial REIT, has decided to terminate Cathay's lease agreement. And we're not talking about small change here. The landlord is trying to recover $4.3 million in rental arrears. This is a pretty big deal, folks. It shows the ongoing struggles in the cinema industry, which has been hit hard by the pandemic and changing consumer habits. For MM2 Asia, this is just another challenge in what's been a tough period. Their shares closed at 1 on Wednesday, unchanged from the previous day. This low share price reflects the difficulties the company has been facing. If you're invested in the entertainment sector or considering it, this news from MM2 Asia is a reminder of the challenges these companies are facing. It's also a heads up to keep an eye on how companies are managing their debts and operational costs in these tricky times. Now, let's shift gears to some more positive news. ST Engineering, a major player in the defense and engineering sector, has some exciting developments. Their subsidiary, ST Engineering Mission Software and Services, has teamed up with the Home Team Science and Technology Agency to create a new joint venture. This new company, called Codex Solutions, was incorporated in Singapore on Wednesday with an initial paid-up capital of $10 million. That's a significant investment, which shows they're serious about this venture. So what's Codex Solutions all about? Well, they're going to focus on developing and maintaining in-house software capabilities for the home team. This is a smart move by ST Engineering. It shows they're expanding their reach in the software and technology space, which is becoming increasingly important in defense and security. It's also a good example of how companies can partner with government agencies to create new business opportunities. Investors seem to like this news. ST Engineering's shares closed 1.7% higher on Wednesday, reaching $6.67. This uptick suggests that the market views this new venture positively. For those of you interested in the defense and technology sectors, ST Engineering is definitely a company to watch. Last but not least, let's talk about UMS Integration. This semiconductor manufacturer has just announced some big news that could shake things up for investors. They've received approval for a secondary listing on the main market of Bursa, Malaysia. Now you might be wondering, Iggy, what's the big deal about a secondary listing? Well, let me break it down for you. This move could potentially broaden UMS Integration's reach and widen its investor base. In simple terms, more people might have the opportunity to invest in the company. This could lead to improved share liquidity, which is generally good news for existing shareholders. The semiconductor industry has been on a roller coaster ride lately, with ups and downs driven by global supply chain issues and changing demand. UMS Integration's move to list on the Malaysian Stock Exchange could be seen as a strategic step to strengthen its position in the region. However, It's worth noting that the market's initial reaction was somewhat muted. UMS shares closed 0.9% lower at $1.11 on Wednesday. This slight dip doesn't necessarily reflect negatively on the news. Sometimes it takes a while for the market to digest new information. For those of you interested in the semiconductor sector, UMS Integration is definitely a company to keep on your radar. This secondary listing could open up new opportunities, but as always, it's important to do your own research and consider how it fits into your overall investment strategy. And that wraps up our Singapore Market Digest for today. We've covered some significant developments across various sectors, from real estate with Paragon Reit to entertainment with MM2 Asia, defense and technology with ST Engineering, and semiconductors with UMS Integration. Remember, friends, the market is always moving, and staying informed is key to making smart investment decisions. Whether you're a seasoned investor or just starting out, I hope this digest has given you some food for thought. This is Iggy from the Investing Iguana, signing off. Until next time, happy investing, and don't forget, in the world of finance, it pays to think like an iguana, always alert, ready to adapt, and with a keen eye for opportunity. Take care.